Welcome back to Saturday Night Live. We're live. We're live. I'm drinking a Guinness tonight. One Guinness. So I'll be liquidating my Robinhood account. I've moved over 40% of my funds. Just too much kerfuffle with Robinhood. All kind of hacking. I'm going to designate Robinhood option trading only. I'll be selling IDT. IDT was on my stock list last Sunday stock list. IDT. The company has this Boss Revolution. If you're acclimated to phone cards, Boss Revolution. That's IDT. All right. That was on my stock list. I'm up 14.7% on the week. I'll be selling, I believe, in one share for tracking purposes. Also, I'll be selling RMG. RMG was on my stock list Sunday. I'm flat. I'm up 0.86%. A little over par. Also, I'll be selling Ktra. Ktra was on my Sunday stock list. Last Sunday's stock list. I will be selling on Monday. They're hacking Robinhood. I've seen too many complaints about Robinhood this year, but I'll be leaving some funds for option trading. I'm practicing option trading. All right, please like the live. What else I got? ZM, I'm up 100% in my Robinhood. Already sold out, and I'm holding 0.37 share. 0.37 share of ZM. My average price for ZM, this is the company Zoom. My average price is 246. I think they're at about 500 right about now. So therefore, I believe in that in Robinhood for tracking purposes. I already have another position in my WEBULL account. Zoom, that one I'll be holding long term. Also, I'll be selling Snow. I'm down 1% on Snow. I'll be selling You. You just IPO'd about a month ago. I'm up 27.16%. I'll be liquidating that, but I believe in one share in Robinhood for tracking purposes. What else? That's it. BDR has a nice 5-day chart setting up. Shout out to that subscriber who asked me about PBR. I'll be putting that one on my stock list. I'm seeing a nice setup on their 5-day chart. BDR. CBAT. Someone asked me about CBAT. Ticker symbol CBAT. I do not like it in the short term. They were down 12% on Friday. They're pulling back. They're pulling back too fast. They're on a downtrend right now. CBAT. But it was up a lot, so it's doing a retracement. Let's see if it could reverse. And another stock they asked me about was KNDI. KNDI is all over the place. I don't see a direct trend for KNDI. I do not like KNDI right now. Please like the live. This is Dave's Saturday Night Live. I won't be on too long. What else we got going on? So for Monday, we're stalking. We're going to continue to stalk VVPR. Welcome K-Last in the building. Welcome K-Last in the building. The stock list, we have VVPR. VVPR for next week. We also looking at, did I write it down? We're also looking at, I'll tell you in a second. We're watching PSHG. Let me write that down. PSHG. I'll probably do a live trade on Monday, 4 a.m. Set your notification. Live trade, real quick. PSHG. Also, LMPX. LMPX. I'm so pissed. I had this one from about $6. It was over $20, but it started to come down to 19, and I got out at $18 just to watch it pop 23% on Friday in the after hours. They're at $43. LMPX, it's an automotive company. LMPX. I also started a position in the after hours. LMPX. I told you you could get out of a stock and you could always get back in. So I'm back in LMPX. LMPX looking strong. Also, I'm stalking for Monday. RBAC. 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 Don't miss my Sunday stock list tomorrow. Sunday stock list, set your notification. What else is going on?
Chapter 1. Clues from the past. You have some money in the bank. You decide you'd like to buy some common stock. You may have reached this decision because you desire to have more income than you would if you use these funds in other ways. You may have reached it because you want to grow with America. Possibly, you think of earlier years when Henry Ford was starting the Ford Motor Company, or Andrew Mellon was building up the Aluminum Company of America, and you wonder if you couldn't discover some young enterprise which might today lay the groundwork for a great fortune for you too.
Davina texting.
Just as likely, you are more afraid.
Davina, are you on the live?
And want to have a nest egg against a rainy day.
You could acknowledge yourself.
After hearing more and more about inflation, you desire something which will be safe and yet protected from further shrinkage in the buying power of the dollar.
Congrats on your biology.
Probably your real motives
B grade on your bio.
A number of these things, influenced somewhat by knowing a neighbor who's made some money in the market, and possibly by receiving a pamphlet in the mail
college
explaining just why Midwestern pumpernickel is now a bargain. A single basic motive lies behind all this, however. For one reason or another, through one method or another, you buy common stocks in order to make money. Therefore, it seems logical that before even thinking of buying any common stock, the first step is to see how money has been most successfully made in the past. Even a casual glance at American stock market history will show that two very different methods have been used to amass spectacular
Big up
fortunes.
Michael in the building.
In the 19th century and in the early part of the 20th century, a number of big fortunes and many small ones were made largely by betting on the business cycle. In the period when an unstable banking system caused recurring boom and bust,
what are you looking at for next week?
Selling them in good had strong elements of value. This was particularly true for those with good financial connections who might have some advance information about when the banking system was becoming a bit strained. But perhaps the most significant fact to be realized is that even in the stock market era, which started to end with the coming of the Federal Reserve System in 1913 and became history with the passage of the Securities and Exchange legislation in the early days of the Roosevelt administration, those who used a different method made far more money and took far less.
No, I don't hate MRPS.
Even in those earlier times, finding the really outstanding companies and staying with them through all the fluctuations of a gyrating market proved
BLM sector.
To far more people.
BLM as a sector. Okay. Let me look at MARPS. What's MA? Oh man, 114% on Friday. How comes I didn't see this one? Wait, let me make a note of this one. MRPS. No news. But yeah, the energy sector is heating up again. The volume was 6.9 million. Their average volume is 100K. MARPS. I'm writing that one down. MARPS. That's a big move on Friday. What was I doing? After 12, it spiked. It spiked about 12:30. All the way up to 465. Pull back to 280, 265, and they close at 375. MARPS might be the one to watch next week. Let's see. 77 dimes in the building. SNMP. Will it go back to $2? SNMP. Nah, they're below $1. So on Friday they trended all the way down back to 72 cents. It's not a good look. I wouldn't touch that one until it impales $1. SNMP. If you're down, I think you should sell. Yeah, cut your loss if you're losing. SNMP, not looking good right about now. All right, please like the live.
Then did the more colorful practice of trying to buy them cheap and sell them dear. If this statement appears surprising, further amplification of it may prove even more so. It may also provide the key to open the first door to successful investing. Listed on the various stock exchanges of the nation today are not just a few, but scores of companies in which it would have been possible to invest, say, $10,000 somewhere between 25 and 50 years ago, and today have this purchase represent anywhere from $250,000 to several times this amount.
I could never catch that
within the
BLM
lifetime
sector.
of most investors, and within the period
Are you
in
talking
which
about
their parents could have acted
Carver,
for nearly all of them, there were available scores of opportunities to lay the groundwork for substantial fortunes for oneself or one's children. These opportunities did not require purchasing.
Yeah, they keep eluding me. The only one I caught was BYF.
The shares of these companies were available year after year at prices that were to make this kind of
doubled my
profit
money.
possible.
But all the others, I can't catch them every time.
Was the ability to distinguish these relatively few
late.
companies with outstanding
I was late to Carver. I was late to
for the much greater number whose future would vary.
I got bankrupt holding Rose, ROSE.
To the complete failure. Are there opportunities existing
I lost
today
money on
to make
ROSE.
investments that in the years ahead will yield corresponding percentage gains?
Yes, so you
The
have
answer to this question
U1
deserves rather detailed attention.
I could
If
never
it be
catch
in
them.
the affirmative, the path for making real profits through common stock investment starts to become clear. Fortunately, there is strong evidence indicating that the opportunities of today are not only as good as those of the first quarter of this century, but are actually much better. One reason for this is the change that has occurred during this period in the fundamental concept of corporate management and the corresponding changes in handling corporate affairs that this has brought about. A generation ago, heads of a large corporation were usually members of the owning family. They regarded the corporation as a personal possession. The interests of outside stockholders were largely ignored. If any consideration at all was given to the problem of management continuity, that is, of training younger men to step into the shoes of those whose age might make them no longer available, the motive was largely that of taking care of a son or a nephew who would inherit the job. Providing the best available talent to protect the average stockholder's
my long-term
was
play,
seldom a matter in the forefront of the minds of management.
I call this one out
In that age
Thursday.
of autocratic personal domination, the tendency of aging management
15%
was to resist
already.
innovation or improvement, and frequently to refuse even to listen to suggestions or criticism. This is a far cry from today's constant competitive search to find ways of doing things better. Today's top corporate management
no worries,
is
77 dimes, no worries.
Self-analysis and, in a never-ending search for improvement, frequently even goes outside its own organization by consulting all sorts of experts in its effort to get good advice. In former days, there was always great danger that the most attractive corporation would not continue to stay ahead in its field, or if it did, that the insiders would grab all the benefits for themselves. Today, investment dangers like these, while not entirely a thing of the past, are much less likely to prove a hazard for the careful investor. One facet of the change that has come over corporate management is worthy of attention. This is the growth of the corporate research and engineering laboratory, an occurrence that would hardly have benefited the stockholder if it had not been accompanied by corporate management's learning a parallel technique, whereby this research could be made a tool to open up a golden harvest of ever-growing profits to the stockholder. Even today, many investors seem but slightly aware of how fast this development has come, how much further it is almost certainly going, and its impact on basic investment policy. There is no quick and easy yardstick for either management or the investor to measure the profitability of research. Just as even the ablest professional baseball player cannot expect to get a hit much more often than 1 out of every 3 times he comes to bat, so a sizable number of research projects governed by the law of averages are bound to produce nothing profitable at all. Furthermore, by pure chance, an abnormal number of such unprofitable projects may happen to be bunched together in one particular span of time.
Please check out my playlist.
Commercial laboratory. Finally, it is apt to take from 7 to 11 years from the time a project is first conceived until it has a significant favorable effect on corporate earnings. Therefore, even the most profitable of research projects is pretty sure to be a financial drain before it eventually adds to the stockholders' profit. But if the cost of poorly organized research
PSHG,
and
very
hard
good.
to detect, the cost
Watch
of
for a
too little
continuation
research may
Monday.
be
Let's
even
see.
higher.
Then you could add. If you're in the money, you could add.
The introduction of many kinds
Never
of
add on the way
materials
down.
and new types of machinery
Unless you're planning
will
to hold a
steadily
stock
narrow
long
the
term.
market for thousands of companies, possibly entire industries, which fail to keep pace with the times. So will such major changes in basic ways of doing things as will be brought about by the adoption of electronic computers for the keeping of records and the use of irradiation for industrial processing. However, other companies will be alert to the trends and will maneuver to make enormous sales gains from...
Let me check. This is an important text.
such awareness. The managements of certain of such companies may continue to maintain the highest standards of efficiency in handling their day-to-day operations while using equally good judgment in keeping ahead of the field on these matters affecting the long-range future. Their fortunate stockholders, rather than the proverbial meek, may well inherit the earth. Before going further, it might be well to summarize briefly the various investment clues that can be gleaned from a study of the past and from a comparison of the major differences from an investment standpoint between the past and the present. Such a study indicates that the greatest investment reward comes to those who by good luck or good sense find the occasional company that over the years can grow in sales and profits far more than industry as a whole. It further shows that when we believe we have found such a company, we had better stick with it for a long period of time. It gives us a strong hint that such companies need not necessarily be young and small. Instead, regardless of size, what really counts is a management having both a determination to attain further
so I'll be liquidating my Robinhood account
to bring its plans to completion.
I've already transferred 40% of my
further clue that this growth is often
holdings.
Associated with knowing how to organize research in the various fields of the
selling out
natural
my stocks
sciences
on Monday,
so as to bring
and
to market economically worthwhile and usually
there's too much hacks, too much hacking going on with Robinhood.
It makes clear to us
I don't want to get
that
caught
a
up in
general
that.
characteristic of such companies is a management that does not let its preoccupation with long-range planning prevent it from exerting constant vigilance in performing the day-to-day tasks of ordinary business outstandingly well. Finally, it furnishes considerable assurance that in spite of the very many spectacular investment opportunities that existed 25 or 50 years ago, there are probably even more such opportunities available today. Chapter 2. What Scuttlebutt can do.
Scuttlebutt rumors.
As a general description of what to look for, all this may be helpful,
Scuttlebutt.
but as a practical guide for finding outstanding investments, it obviously contributes relatively little. Granted that this furnishes a broad outline of the type of investment that should be sought.
Yes,
How does the investor go about finding the specific company which
except
might
on
open
SPI,
the way
I
to
should
major
be scaling in when I was scaling.
One way
I was scaling out when I should be scaling in.
Logical, but rather
SPI. I would have made much more money.
Someone who is sufficiently skilled in the various facets of management to examine each subdivision of a
if I'm up 10%,
and by detailed investigation,
or even 5%, I add to the position.
Its production, its sales organization,
so I add to the position on the way.
And each of its other major functions form a worthwhile.
So if I bought 10 shares,
as to whether the particular company has
I might double it to 20 shares on the way up,
growth and development.
And then start looking to take profits.
Unfortunately, there are several reasons why it usually will not,
especially on those fast-moving stocks.
Very well. In the first place, there are only a few individuals who have the necessary degree of top management skill to do a job of this kind. Most of them are busy at top-level and high-paying management jobs. They have neither the time nor the inclination to occupy themselves in this way.
No, I don't do coins.
Furthermore, if they were so inclined, it's doubtful if many of the real growth companies of the nation would allow someone outside.
I heard a lot of talk about dog coin.
All the data necessary to make an informed decision. Some of the knowledge gained.
I remember when Bitcoin was
too valuable to existing or potential
at
competition to permit its being passed on to anyone having no responsibility to the company furnishing the data.
2007.
There is another course which the investor
2006, 2007.
If properly handled,
it was below $1. Bitcoin.
Provide the clues that are needed to find
Bitcoin.
Really
a lot of opportunities passed me. A lot of opportunities passed me.
I shall call this way of proceeding the
a few years ago, Bitcoin was at $20.
As this method is spelled out in detail in the pages that follow, the average investor will have one
Sharky in the building.
This is that regardless
of how please like the live
scuttlebutt method may be to someone else, it is not going to be helpful to him because he just won't have much chance to apply it. I'm aware that most investors are not in a position to do for themselves much of what is needed to get the most from their investment funds.
There's a beach in Jamaica called Sharky's Beach.
Just what is needed and why.
In Salem.
Only in this way are they in a position to select the type of professional advisor who can best help them. Only in this way can they adequately evaluate the work of that advisor. Furthermore, when they understand not only what can be accomplished, but
there's
also
always opportunities in the market. Tomorrow is another day.
At how from time to time they may be in a
you missed an opportunity, don't worry.
And make more profitable.
There's more opportunities
already being done
come
for them by their investment advisors. The business grapevine is a remarkable thing. It's amazing what an accurate picture of the relative points of strength and weakness of each company in an industry can be obtained from a representative cross-section of the opinions of those who in one way or another are concerned with any particular company. Most people, particularly if they
I missed Amazon at $34,
quoted, like to
2008. The stock dropped from $90 to $34.
About their competitors.
Always outsmart myself. I'm saying I'm going to wait for it to go below $30.
About the points of
Never
strength
did.
and weakness of the other four, and 9 times out of 10,
I could be sitting on 100 shares of Amazon right now.
Picture of all 5.
Right now I'm sitting on 1 share Amazon.
However, competitors are only one and not necessarily the best source of informed opinion. It's equally astonishing how much can be learned from both vendors and customers about the real nature of the people with whom they deal. Research scientists in universities, in government, and in competitive companies are another fertile source of worthwhile data. So are executives of trade associations. In the case of trade association executives especially, but to a great extent the other groups as well, it is impossible to lay too much stress on the importance of 2 matters. The inquiring investor must be able to make clear, beyond any doubt, that his source of information will never be revealed. Then he must scrupulously live up to this policy. Otherwise, the danger of getting an informant into trouble is obviously so great that unfavorable opinions just do not get passed along. There is still one further group which can be of immense help to the prospective investor in search of a bonanza company. This group, however, can be harmful rather than helpful if the investor does not use good judgment and does not do plenty of cross-checking with others to verify his own judgment as to the reliability of what is told him. This group consists of former employees. Such people frequently have a real inside view in regard to their former employer's strength and weakness. Equally important, they will usually talk freely about them.
Yep.
But enough such former employees
was in the
rightly
pennies.
or wrongly feel they were fired
2006,
without good cause
2007.
or left because of a justified grievance that it's always important to check carefully into why employees left the company being studied. Only then is it possible to determine the degree of prejudice that may exist and to allow for it in considering what the former employee has to say. If enough different sources of information are sought about a company, there is no reason to believe that each bit of data obtained should agree with each other building. Actually, there is not the slightest need for this to happen. In the case of really outstanding companies, the preponderant information is so crystal clear that even a moderately experienced investor who knows what he is seeking will be able to tell which companies are likely to be of enough interest to him to warrant taking the next step.
In the building.
This next step is to contact the officers of the company to try and fill out some of the gaps
Neville
still
in the
existing
building.
In the investor's picture of the situation being studied. Chapter 3. What to buy. The 15 points to look for in a common stock.
You got my father's name, Neville.
What are these matters about which the investor should learn if he is to obtain the
Please
type
like,
of investment
please like
which
the
in a
live.
few years might show him a gain of several 100% or over a longer period of time might show a correspondingly greater increase? In other words, what attributes should a company have to give it the greatest likelihood of attaining this kind of results for its shareholders? There are 15 points.
Welcome, Wyatt.
With which
Wyatt
I
in the
believe
building.
the investor should concern himself. A company could well be an investment bonanza if it failed fully to qualify on a very few of them. I do not think it could come up to my definition of a worthwhile investment if it failed to qualify on many.
DPW, that stock is so elusive. DPW.
How efficiently this policy is carried out. Some of these points
it always runs without me.
which should largely
DPW.
be determined from information
I've been watching that
obtained
stock
from
for
sources
years.
outside the company being studied, while others are best solved by direct inquiry from company personnel. These 15 points are: point 1. Does the
Wyatt,
company
you're always
have
in the big boy
products or
class.
services with sufficient market
178
potential
shares
to
of
make
ET.
possible a sizable increase in sales for at least several years?
Island Gal in the building.
It is by no means impossible to make a fair,
Big up Island Gal in the building. Thanks for your support.
Stationary or even a declining sales curve. Operating economies resulting from better control of costs can at times create enough improvement in net income to produce an increase in the market price of a company's shares. Sort of one-time profit.
Excuse me, let me look at ET real quick. Wyatt always coming with the big plays. Oh, the energy sector is heating up. The energy sector, pay attention to MARPS for Monday. How comes this stock was 100%? I didn't even notice. What was I doing Friday? Oh, I had a meeting. Okay. MARPS. It went as high as 565. 565. MARPS. 565. That's their new 52-week high. So it spiked all the way up and then pulled back late afternoon. Yeah, back to ET. What do you like about ET? Wyatt, what do you like about ET? I see the 5-day chart starting to set up. Okay, they're making a comeback. They've been down all year. ET. What did you say, Kay? I'm making bank, I try. I need to go in more heavily. That's why I'm practicing options. If I could bank on the options big time, but I'm very timid with the options because I got wiped out 2016, 2017. I almost blew my account. I was depressed. I stopped trading for a year, focused on some real estate.
Is eagerly sought by many speculators.
Then come back fresh.
It does not offer the degree of opportunity, however, that
they're paying dividends. Okay,
to
that's
the
a good look.
possible gains from their investment funds. Neither does another type of situation, which sometimes offers a considerably larger degree of profit. Such a situation occurs when a changed condition opens up a large increase in sales for a period of a very few years, after which sales stop growing. Not even the most outstanding growth companies need necessarily be expected to show sales for every single year larger than those of the year before. In another chapter, I'll attempt to show
not working
why the
out, you got to take a break.
Of commercial research
get
and the
your mind
problems
right.
of marketing new products tend
This is
to
a
cause
tough game.
such
If your
sales
mind is
increases
not right,
to come in an irregular series of uneven spurts rather than in a smooth year-by-year progression. The vagaries of the business cycle will also
that time
have a
I was
major
going through a
influence
divorce,
on year-to-year
so you can't trade and go through a divorce.
Therefore, growth should not be judged on an annual basis, but say by taking
it
units
is a partnership.
several
They
years
have
each.
90,000 miles of
give promise of
natural
greater than
gas
normal
and
growth,
oil
not only for the
pipelines.
next several year period, but also
That's
for
big.
a considerable time beyond that.
So I'm going to write that one down.
Which decade by decade have consistently shown spectacular growth might be divided into two groups.
If it's even for the dividends.
For lack of better terms, I'll call one group those that happen to be both fortunate and able. The other group, those that are fortunate because they are able. A high order of management ability is a must for both groups. No company grows for a long period of years just because it's lucky.
It's an income generating company. You just hold for the dividends.
A high order of business skill. Otherwise, it will not be able to capitalize on its good fortune and to defend its competitive position.
They're at an attractive price right now.
Point 2. Does the management have a determination?
Because remember, the market is still shaky. We still have elections coming up in November.
Increase total sales potentials when the growth potentials of
this week was a good week. Who knows what Mr. Trump going to tweet next week?
Companies which have a significant growth prospect for the next few years because of new
just be
demand
alert.
for existing lines, but which have neither policies nor plans to provide for further development beyond this, may provide a vehicle for a nice one-time profit. They are not apt to provide the means for the consistent gains over 10 or 25 years that are the surest route to financial success. It is at this point that scientific research and development engineering begin to enter the picture. It is largely through these means that companies improve old products and develop new ones. This is the usual route by which a management not content with one isolated spurt of growth sees that growth occurs in a series of more or less continuous spurts. The investor usually obtains the best results in companies whose engineering or research is to a considerable extent devoted to products having some business relationship to those already within the scope of company activities. This does not mean that a desirable company may not have a number of divisions, some of which have product lines quite different from others. It does mean that a company with research centered around each of these divisions, like a cluster of trees, each growing additional branches from its own trunk, will usually do much better than a company working on a number of unrelated new products, which, if successful, will land it in several new industries unrelated to its existing business.
Capital gains.
At first glance, point 2 may appear to be a mere repetition of point 1. This is not the case.
I like
Point
supernova
one
moves.
is a matter of fact, appraising the degree of
but if the market crashes,
that now exists for a company's
I'll
product.
definitely be
Point
buying
two is
dividend
a matter
stocks.
Of management attitude.
If the
Does
market
the
crashes,
company now recognize that
once the market is on a tier,
it will almost certainly have grown up to the potential of its present market, and that to continue to grow, it may have to develop further new markets at some future time? It is the company that has both a good rating on the first point and an affirmative attitude on the second that is likely to be of the... Let me stop this a second. Let me check out MARPS. Let me see if I have any shares in. I can't believe I missed this one. Oh, I have a position. I'm up 12%. When did I buy this? I got in at 273. 273. I am up 12%. And they're down 18% in the pre. Yeah, I didn't like the way it closed. It closed down. The momentum faded late. MARPS. I think I'm going to sell that one on Monday. When did I buy this? Let me check. When did I buy MAR? Oh, I bought it Friday. I bought it at 3 o'clock. Okay, this is a stock I've been trading since July, MARPS. But I never made money. I bought at 260 and I sold out at 223. This is in July. And I started back a position on the 9th of October at 275. I also added on October the 9th at 270. So I'm up 12%. I'll be selling in the pre-market Monday. This is MARPS because it's not holding up. They're down 13% in the after hours. MARPS. The greatest investment interest. Point three. How effective are the company's research and development efforts? Okay, I have an account. Size? I have a long-term account that was holding NOA. It is not too for 3 years. Figures showing the number of dollars being spent I was down and I was doing dollar cost averaging during the pandemic. It's only a matter of the simplest mathematics. As soon as I'm up 10%, I sold out. NOA. This is a Canadian company. Of each sales dollar that a Canadian construction company. The stock's been down too long. I can't wait. This research figure but at least I got out with a profit. With that of others in the same general field. I don't have anything else. I got ZM long term. With the average of the industry by averaging the figures of Apple many somewhat similar companies. From this, conclusions are drawn both Tesla, as to the importance of a company's research effort and in relation to competition and the amount of research per share of stock that the investor is getting in a particular company. Figures of this sort can prove a crude yardstick that may give a worthwhile hint that one company is doing an abnormal amount of research or another, ATEC. But unless a great deal of further knowledge is obtained, such figures can be misleading. Long term. One reason for this is that companies vary enormously in what they include as research and development expense. What else I have? I think I have FLGT. That most authorities would not consider genuine research at all, since it's really tailoring an existing product on track, OT, in other words, sales engineering. Conversely, another company will charge the expense that one is going to $100 on a completely new product to production rather than research. Most experts would call this a pure research function since it's directly related to obtaining the know-how to make a new product.
ENSV, you're going to sell in the pre?
Research
Okay.
on a comparable accounting basis, the relative figures on the amount of research done by various well-known companies might look quite different from those frequently used in financial circles. In no other major subdivision of business activity are to be found such great variations from one company to another between what goes in as expense and what comes out in benefits as occurs in research. Even among the best managed companies, this variation seems to run in a ratio of as much as 2 to 1.
Is that an energy company?
Some well-run companies will get as much as twice the ultimate gain for each research dollar
ENSV was down 12%.
If averagely run companies are included, this variation between the best and the mediocre is still greater. This is largely because the big strides in the way of new products
around here we don't hold a note. Stop not performing, we're out of it.
They come from teams of highly trained.
When it turned around, then you could start back your position.
One may be a chemist, another a solid-state physicist, a third a metallurgist, and a fourth a mathematician. The degree of skill of each of these experts is only part of
Let's see what happens with the election.
To produce outstanding results.
I am very nervous.
It's also necessary to have leaders who can coordinate
the outcome
work
of the
people
election.
Of such diverse backgrounds and keep them driving toward a common goal. Consequently, the number or prestige of research workers in one company may be overshadowed by the effectiveness with which they are being helped to work as a team in another. Point 4. Does the company have an above-average sales organization?
Please like the live.
In this competitive age, the products or services of few companies
Never,
are
I don't
so
see anything
outstanding that they will sell
What's
to their
that?
maximum
Is that the
potentialities
ticker symbol?
if they are not expertly merchandised.
I see DHR.
That is the most basic single activity of any
DHR.
business.
They're
Without
at
sales, survival is
$226.
impossible. It's the making of repeat sales to satisfied customers that is the first benchmark of success. Yet strange as it seems, the relative efficiency of a company's sales, advertising, and distributive organizations receives far less attention from most investors, even the careful ones, than do production, research, finance, or other major subdivisions of corporate activity.
This thing is clocking.
Of all the phases of a company's activity, none is easier to learn about from sources outside the company than the relative efficiency of a sales organization. Both competitors and customers know the answers. Equally important, they are seldom hesitant to express their views.
12 cents
to 15 cents. The time spent by the careful investor in inquiring into this subject is usually richly
I got
rewarded.
you, okay.
I am devoting less space to this matter of relative sales ability than I did to the matter of relative research ability. This does not mean that I consider it less important. In today's competitive world, many things are important to corporate success. However, outstanding production, sales, and research may be considered the three main columns upon which such success is based. Saying that one is more important than another is like saying that the heart, the lungs, or the digestive tract is the most important single organ for the proper function of the body. All are needed for survival, and all must function well for vigorous health. Look around you at the companies that have proven outstanding investments. Try to find some that do not have both aggressive distribution and a constantly improving sales organization.
Okay, finally I got
Point
Dan.
5. Does the company
Dan is
have
looking
a
okay.
worthwhile profit margin? Here at last is a subject of importance.
They got to get over that $16.
To the type of mathematical analysis which so many financial people feel is the backbone of sound investment decisions. From the standpoint of the investor, sales are only of value when and if they lead to
DAN is at a pivotal point.
All the sales growth in the world won't produce the right type of investment vehicle if over the years profits don't grow correspondingly. The first step in examining profits is to study a company's profit margin, that is, to determine the number of cents of each dollar of sales that is brought down to operating profit. The wide variation between different companies,
scary election here indeed,
will immediately
because
become
he might not concede.
Such a study should be made not for a single year, but for a series
Prepare
of
for
years.
a lot of recount.
It then becomes evident
A lot
that
of
nearly all
recount
companies
requests.
have broader profit margins, as well as greater total dollar profits, in years when an industry is unusually prosperous. However, it also becomes clear that the marginal companies, that is, those with the smaller profit margins,
you missed your
nearly
exit
always
at 25
increase
cents.
their profit margins by a considerably
And it went
greater
to
percentage in the
23.
good years than
It
the
happens.
lower cost companies, whose profit margins also get better, but not to so great a degree. This usually causes the weaker companies to show greater percentage
NOA had
increase
some
in
good
earnings
news on
in
the
a year
8th.
of abnormally good business
Okay.
than do the stronger companies in the
I
same
think I'm
period.
holding a little
However,
position.
it should also be
NOA. I think
remembered
I
that
did
these
liquidate
earnings will
everything.
decline correspondingly more rapidly when the
But
business tide
I've been out of
turns.
patience with
For this reason, I believe that
NOA.
the
I was
greatest
holding from
long-range
10 bucks. It
investment
went all the
profits
way
are
to
never obtained by investing in marginal
5
companies.
bucks or so
The
in the
only
pandemic,
reason for
March,
considering a
April.
long-range investment in a company
Then
with
I start to
abnormally
dollar
low
cost
profit margins
average.
is that there might be strong
A few weeks
indications
ago, I was up
that a fundamental
10%.
change is
I
taking
got
place
out of
within
there.
the company. This would be such that the improvement in profit margins would be occurring for reasons
I think I was
other
down
than a temporarily
50%
expanded
at
volume
one
of
time.
business. In
And
other words,
they pay a
the
dividend.
company
That
would
was the
not
only
be
reason I like
in
the
the
stock.
true sense of the word, since the real
It's
reason
not
for
a growth. It's
buying
not a
is
growth
that
stock. It's not
efficiency or
moving.
new products developed within the company have taken it out of the marginal
I've
category.
exceeded my patience.
When such internal changes are taking place in a corporation, which in other respects pretty well qualifies as the right type of long-range investment, it may be an unusually attractive purchase. So far as older and larger companies are concerned, most of the really big investment gains have come from companies having relatively broad profit
Wyatt,
margins.
you said a good one to watch
Usually,
is
they have among the best
SILV.
such margins in their industry.
That sounds like
In
silver.
regard to
Let me
young
put it down.
companies, and occasionally older
Let me make a
ones,
notation.
there is one important deviation from this
SILV.
rule, a deviation, however,
Thanks,
that
Wyatt.
is generally more apparent than real.
Buy when
Such
it
companies
drops
will at times
with the price of silver.
deliberately
Okay.
elect to speed up growth by spending all or a very large part of the profits they would otherwise have earned on even more research or on even more sales promotion than they would otherwise be doing. What is important in such instances is to make absolutely certain
Teamwork
that it is actually
makes
still
the dream
further
work.
research, still further
Thanks
sales
for all the
promotion,
plays.
or
Thanks for
still
all the
more in any other
suggestions.
activity which is being financed today so as to
Thanks
build
for all
the
the heads
future
up.
that is the real cause of the narrow or
I
non-existent
can't catch
profit margin.
everything. Robinhood, be
The
careful with
greatest care should
Robinhood.
be used
I've been
to be
seeing too
sure that
much
the volume of the activities
negative
being
news
credited with
regarding
reducing the profit
hacking.
margin is not merely the volume of these activities needed
Folks
for a
are money
greater
are
growth,
disappearing
but actually
out of folks'
represents
account.
even more research,
That's not a good
sales
look.
promotion, etc. than this. When this
The only
happens,
money I
the
need to
research
disappear
company
is a
with an
loss of
apparently
a
poor
stock.
profit
That's it.
margin
No
may be
hacking.
an unusually attractive investment.
You said
However,
what you said.
with the exception of
SILV was
companies
up
of
to
this type, in
13%
which the
this
low
week.
profit margin is being
Okay.
deliberately engineered in order
I'll
to
keep a
further
stock on
accelerate
that
the
one for
growth
a
rate,
pullback.
investors desiring maximum gains over the years had best stay away
What's the price
from
for gold
low-profit
these
margin
days?
or marginal companies.
About $2,000 per ounce.
Point 6. What is the
Gold
company
has been
doing
sitting at
to
$1,200 for like a
maintain
decade
or
or
improve
two.
profit margins? The success of a stock purchase does not depend on what is generally known about a company at the time the purchase is made. Rather, it depends upon what gets to be known about it after the stock has been bought. Therefore, it's not the profit margins of the past, but those of the future that are basically important to the investor. In the age in which we live, there seems to be a constant threat to profit margins. Wages and salary costs go up year by year. Many companies now have long-range labor contracts calling for still further increases for several years ahead. Rising labor costs result in corresponding increases in raw materials and supplies. The trend of tax rates, particularly real estate and local tax rates, also seems to be steadily increasing. Against this background, different companies are going to have different results in the trend of their profit margins. Some companies are in the seemingly fortunate position that they can maintain profit margins simply by raising prices. This is usually because they are in industries in which the demand for their products is abnormally strong, or because the selling prices of competitive products have gone up even more than their own. In our economy, however, maintaining or improving profit margins in this way usually proves a relatively temporary matter. This is because additional competitive production capacity is created. This new capacity sufficiently outbalances the increased gain so that, in time, cost increases can no longer be passed on as price increases. Profit margins then start to shrink. Some companies achieve great success by maintaining capital improvement or product engineering departments. The sole function of such departments is to design new equipment that will reduce costs and thus offset or partially offset the rising trend of wages. Many companies are constantly reviewing procedures and methods to see where economies can be brought about. The accounting function and the handling of records has been a particularly fertile field for this sort of activity. So has the transportation field. Shipping costs have risen more than most expenses because of the larger percentage of labor costs in most forms of transportation as compared to most types of manufacturing. Using new types of containers, heretofore unused methods of transportation, or even putting in branch plants to avoid cross-hauling have all cut costs for alert companies. None of these things can be brought about in a day. They all require close study and considerable planning ahead. The prospective investor should give attention to the amount of ingenuity of the work being done on new ideas for cutting costs and improving profit margins. Here, the scuttlebutt method may prove of some value, but much less so than direct inquiry from company personnel. Fortunately, this is a field about
okay, Neville. Thanks for joining the live. Thanks for your participation.
Most successful work along this line.
You enjoy the rest of your weekend, Neville. Big up.
Built up the organization with the know-how.
Shout out to 77 Dimes for checking in.
They are
big up to
extremely likely
Sharky.
to be in the group offering the
Big
greatest
up to Island Gal.
to their shareholders.
Bobby Face. Wyatt.
Does the company
Klas.
outstanding
Klas, I really appreciate the participation.
Most
All right.
May not fully appreciate the profits from good
10 heads are better than one.
Few of them fail to recognize the impact
Shout out
of
to
bad
Wyatt
labor
again.
relations. The effect on production of frequent and prolonged strikes is obvious to anyone making even the most cursory review of corporate financial statements. However, the difference in the degree of profitability between a company with good personnel relations and one with mediocre personnel relations is far greater than the direct cost of strikes.
So they're from Canada.
If workers feel that they are fairly
with mines
by
in
their
Mexico.
employer, a background has been
SILV.
laid wherein efficient leadership can accomplish much in increasing productivity per worker. Furthermore, there is always considerable cost in training each new worker. Those companies
Exactly,
with
Kay.
an
The hacking
abnormal
is
labor
worse.
turnover have therefore an element
But
of
I
unnecessary
think they're federally
expense
insured.
avoided by better managed enterprises.
You should get your money back if
Companies
you've
with
been
good
hacked.
labor relations usually
Robinhood
are
should
ones
have that
making
kind of
every
insurance.
effort to settle grievances.
I know they're
quickly.
not stupid.
The small individual grievances that take long to
I'm
settle
sure they have
and are not considered
fiduciary
important by management
liability
are ones
and
that
hacking
smolder
liability
and finally flare up seriously. In
Robinhood.
addition to appraising
But
the
I want to move
methods
some
set up
funds
for
out
settling
anyway.
grievances, the investor might also
I'll
pay
leave
close
some
attention
for
to wage
option
scales.
trading only.
The
Robinhood.
company that makes above average profits
And I'll
while
do my
paying
day-to-day
above average
in
wages for
WEBULL,
the area
in and
in
out
which it
to
is
WEBULL.
located is likely to
I
have
got
good labor
E-Trade.
relations. The investor who buys into
I've
a situation in which a significant part of earnings
I've
comes
got
from
Charles
paying below
Schwab.
standard
Charles
wages
Schwab,
for
where I
the
do my
area
sub
involved,
pennies.
may in time have
I have
serious
no luck
trouble
with
on
the
its
sub
hands.
pennies. They're not doing well.
Finally, the investor should be sensitive
But
to
Schwab
the
trades
attitude
sub pennies,
of top
OTCs, so
management
that's
toward
why I
their
have the
rank and
account.
file employees.
Charles Schwab.
Underneath all the fine-sounding generalities,
Michael, boom,
some
bam.
managements have little feeling of
Thanks
responsibility
for tuning
or
in.
interest in their ordinary workers. Their chief concern is that no greater share of their sales dollar go to lower echelon personnel than the pressure of militant unionism makes mandatory.
That's all I have, ladies and gentlemen. Be safe over the rest of the weekend. Don't get in any trouble. Stay indoors and listen to DAVESPLAY, where we make money every day. Let me exit with DJ Concrete Face. I tell you, Jamaicans has the weirdest nicknames. Let me tell you a story about Duppy Teeth. I tried to open up a Twitter account. Every name that I put in, someone already have the name. So I said, okay, let me go to a Jamaican nickname. Duppy Teeth. Sure enough, the account went through. Nobody had that name.
Out around the grass green, ice cream, Dave Natch, clean. You and your team.
Ready V in the building.
Everybody G.
Thanks for tuning in. Please like.
To the world. Got money invested every day. You want your money at? Subscribe to Dave Natch.
Yeah, Jamaicans are cool.
Got a lot of money invested in a Dave.
When you don't mess with them.
Every day. You want your money at? Subscribe to Dave Natch. Food gas. Ton money, ton car meal, ton steering, ton wheel. Legal money and no drug steal. KFC, big deal. Sony, green sleeve, contract sign, done deal. Money a pour like gasoline. For ocean, river stream.
Oh, TD does OTC? I didn't know that. When I'm going to start DJing, I wrote a few lines for this guy. I used to DJ in my teens, but my voice, I don't have a strong voice. So I quit. I always know when to quit.
You want your money at? Subscribe to the match. Football gas. Got a lot of money invested in a day play. Every day. You want your money at? Subscribe to the match. Football gas.
Yes, these are my bars. Some of them. All right, let's go to Danny B, and I'm out. I'll see you tomorrow with the stock list. Sunday stock list. Watch out for Sunday stock list tomorrow.
But you know, I find myself for the money. I instead of squander it and go on with foolishness and go along with it and go along with it. I just go invest my money in our DSP. See that instead of hide it. See me while it here, me I go just invest my money right away in a DSP. Every day and any day, invest your money in a DSP. And you are not. If you want your money, well, ash, as we then say, and get wagga enough and plus. You want your money, Arch? Subscribe to Dave Natch. Please, me I tell you now. Go on, go make the money now, please. Yeah, man. I'm gonna do it fast and quick here. Subscribe to Dave Natch. Fast, don't stop. Every day, you want the money, go check DAVESPLAY. Invest. Interest. Bless.
There you have it, ladies and gentlemen. And don't forget, wherever you go in life, there you go. I'm out. What did Ready V said? Dave, you're goated at stocks. Just wanted to ask you to check fundamental. Yeah, I don't do much technicals. I just go with price action. Go to my video on how to check fundamentals. Just go to DAVESPLAY, how to check fundamentals in your search box on YouTube, where I break down how you check a company fundamentals real quick if you want to hold long term. All right. Okay, last, he said Schwab is better. Okay. I used to have TD. TD Ameritrade was my first account. They were called TD, what was their first name? TD Waterhouse. And then they merged with Ameritrade, and they call themselves TD Ameritrade. I remember one lady, because I used to go down to the broker on Wall Street, the end of Wall Street, right by the seaport. There's a Citibank over there, and then you have the TD Ameritrade brokerage house over there. I used to go lunchtime and trade, because, you know, you didn't have the internet trading. You'd have to trade through a broker for a commission. I think the commission was $15. So you could imagine if you're in and out all the time, those $15 add up. This was 2000. This was in 2000 when the dot-com crash. This lady, she was crying. She lost all her money. So they told her she had, I think she had $100 or so left. And she said she won it. She was down. She was wiped out. That dot-com crash wasn't a pretty. I lost some money too. But I never give up, you know. I always keep at it. Ready V, what did you say? Say no more G, okay. Thanks for tuning in, ladies and gentlemen. Enjoy the rest of your night. Dave Natch, I'm out. Boom, bam.